Move on quickly to Netflix. The co-founder and chairman, Reed Hastings, is stepping down from the board after 29 years. He's going to focus on philanthropy and personal pursuits. Okay, got it. Mark Mahaney is with me now. He covers Netflix, and I want to know what he thinks about Hastings leaving the board. Do you still have confidence in the company?
Yeah, I do. He's one of the icons, I think, of Silicon Valley. Here's somebody who, started a business pretty much from scratch, iterated it dramatically over time. Most of us have forgotten, but that used to be a DVD by mail business. I think he's one of the best entrepreneurs, or the greatest entrepreneurs that's come out of the Valley, I'd say, in the last 30 years. So huge amount of respect for him. I think he's got a lot of other interests now. I don't read a lot more into why he's stepping down. The company itself, the stock's off 10% this morning because they disappointed with their guidance.
Yeah.
I think that's just a timing of expenses issue. So valuation here, I think, is pretty reasonable. This is not one of my top picks, but I think it's a good, constructive, long-term compounder. And on a major sell-off, go down to 90, yeah, I'd probably aggressively step in and buy the stock. That's the setup here. We had high expectations going into the print, and they weren't met. This is an expectations correction, though, not a fundamentals correction.
You're still holding to your target price of $115 a share?
That's right. So you got about 20% upside from here. This company will give you kind of low teens revenue growth, some margin expansion, share repurchases. So the earnings growth should sustain at around 20%. You tell me a company that can sustain 20% earnings growth, and I tell you a stock that can kind of trade somewhere on the low side, 20 times earnings, on the high side, 30 times earnings, and you're kind of in the middle of that range now. So it's a compounder. It'll hold its multiple. Stock goes up as the earnings go up.
The big financial story of the day seems to me to be the drop in the price of oil. Now you're down to $83 a barrel. Does that positively affect the companies and the stocks which you cover?
Absolutely. It may or may not affect the fundamentals of the companies. It was all contingent on how long oil was going to stay elevated at $100. Lower oil prices means it's a risk-on market. And in the meantime, year to date, you've had a good number of corrections here. So it's created these interesting opportunities. I really like Amazon here. Yep. I like Spotify here, and I like Meta here. All three have underperformed year to date, traded off aggressively. Here's your chance to step in and buy.
Okay, we got it. Mark Mahaney on a Friday morning. Good stuff. Thanks very much indeed.